Happy New Year, everyone. Welcome back to the channel. If you're new here, this is just following along with my investing account, which I started last year in February, where I tried to build up a tax-free savings account from $500 all the way up to $10,000. So as you can see, we've already completed that goal last year. So now my goal is to hit it to a $15,000 portfolio. If you want to follow along with the journey and not miss any of my updates, just hit the subscribe button. We just passed 88 subscribers, so that's fantastic, and I'd like to get it up to 100, so please do subscribe if you do like the video. So just following along with the market today, the market is, I'd say the new year started off pretty well for most stocks. You can safely ignore this minus 5% here. We just made a large deposit yesterday of a little bit over $860, so whenever you deposit money and then after a day, Wealthsimple is a little bit weird with the reporting, but you can see here, like, we've deposited 9,000, we're up to 11,000. So over the past week, we're up 2%, which is about 194.23. Past 3 months, we're up 273.96, or 3%. In the past 3 months, we're up 6%, or 624.23. And in the past year, since I've started the portfolio, we're up $1,144.94, or 12%. So going into the portfolio, I'm just going to be going over the transactions and the stocks that I purchased. So first, to start off, we bought one share of Alimentation Couche-Tard. So this is our convenience store company that's all over the world, has a lot of gas stations, and they're already converting a lot of those gas stations in Europe to EV charging stations. So very exciting company for the future, very stable defensive company. Then I bought one share of Alibaba, so I'm going to be going into more detail later in the video as to why I did that. So we bought one more share yesterday when it was at around 116. I bought two more shares of Canadian apartment REITs, so this is a newer holding of mine, just apartment buildings in Canada as well as the Netherlands. A new position here is going to be this Ethereum ETF. So we actually bought 10 shares of this, and this is going to be an income fund. So this is a great way to get cryptocurrency exposure, but also make a large amount of income, because with these covered call funds, the more volatile an asset is, so the more volatile the stock or the commodity you're trading, the higher the income you can make. So this actually gives a 20% yield annually, which is absolutely insane, but it makes total sense with crypto. So here is actually the website for the ETF. It's run by Purpose Investments. So this is a newer fund. It's only been around for maybe a month. 9.3 million assets under management. So very new fund, just came out. And the ideal thing about this is that the only way that you could have crypto before was in a non-registered account. So you could only have it in a personal account, where if you made any gains on crypto and you sold it, you'd have to pay taxes. But because you can actually own this investment in your TFSA or your RRSP, if you have this fund in these accounts, all of your dividend income from this fund is tax-free. So it's a great way to get exposure to cryptocurrency and make a high income. One of the things I don't like about, any kind of alternative asset or gold is just that they don't provide value or cash flow, and this fund actually does provide you that. And this is just an article that they wrote on covered calls and the potential. So in a covered call, essentially the fund is going to be writing an option on Ethereum. So let's say they're going to say, for this example, we'll just go with, let's say Ethereum is going to be selling for $5,000 right now, and you sell an option premium to someone else, so they can call away your Ethereum at, let's say if it reaches $5,500, they have the right to buy it. And if they do, like let's say Ethereum hits 6,000, they will actually get your Ethereum at 5,500, because you gave them the right to buy it at 5,500. So that would be called the strike price, and that's where a call option would be executed. So essentially, If that happens, they would get all of your Ethereum. They would pay you 5,500, so you missed out on a little bit of upside. But they usually have to pay you an options premium, and the more volatile the asset, the higher the option premiums are. So, let's say the fund made $1,000 or $2,000 for that options contract to sell that Ethereum for however many units it is. Then that fund made 5,500 plus whatever the options premium was. Now, the great thing about call options is if the price actually never hits the strike price, then as the options writer, you don't have to sell any of your shares of your stock, or in this case, your Ethereum, and the buyer, still has to pay you that premium. So whatever premium you made is just additional income coming your way. And the genius thing about this fund is just the more volatility there is in the stock or asset, the higher the return or income will be from the options premium. And here's just an example: the crypto market versus the regular market volatility of the S&P 500. You can see that in purple, the S&P is the purple line, and it's volatile. But then you look at Bitcoin and Ethereum. I mean, these guys are all over the place. Like, they're up, way down. So this is a great fund for people that want exposure to crypto but want cash flow. Like me, I want cash flow. I don't want to hold an asset and then I hope that it goes up in value. I want to get something out of it now. And it looks like Intel is also going up steadily. So it's actually going up today. It's going on a bit of a run. So it's at 55.66 because it just seems over the past week that large growth stocks with really high valuations are dropping. Companies like Shopify are way down just because the price of the stock is way above the fundamentals and the value of the stock, whereas Intel is severely undervalued in my opinion, just looking at the company and their future prospects. But it seems like investors are flocking towards value. So I guess that means the market is caring about valuations again. And we also purchased 5 more shares of TELUS. So I bought five more shares. So we went up from 15 to 20 shares. And it's really just going to be the dividend growth. I want to build up this position to the point where I can get a free share every single quarter, just start my own drip essentially, which is just reinvesting your dividend that you receive from holding right back into that same company, increasing your future payouts. And I also purchased 2 more shares of TD Bank yesterday, so we're up to over 10 shares of this bank. And the reason why I picked this one is the exposure it has. So it has exposure in Canada and as well as the United States, which is very fast growing, especially for TD. I think they had about 40% growth over the past year. And they also have the highest dividend growth rate of all the Canadian banks. So another reason why I also want to build this up to where I can basically get an additional share of TD every 3 months. So I have a lot more shares that I need to buy. And I also doubled down on Tesla. So they actually beat expectations by quite a bit with their recent sales. So I decided to double down on this position. And it went on a run again from about 1,000 to about 1,200 at the peak. And it's settling down at 11.56. So Tesla actually delivered an excellent sales for the fourth quarter. They actually beat a lot of estimates from Wall Street. So they said that they were expecting 267,000 deliveries in the fourth quarter, 897,000 for all of 2021. Tesla actually did 308,600 electric cars in the fourth quarter, and full year deliveries amounted to 936,000. So really good that they are ahead of where analysts are projecting. And even in this environment where there's part shortages, Tesla can still deliver incredible results. So that's fantastic to hear when we have other companies that are much larger, making excuses as to why they can't meet or beat estimates. And also year over year, Tesla delivered an 87% increase from 2020 when it reported its first annual profit on delivery. So huge growth over the previous year. And they're also building new factories out. They should be producing even more cars this year. So it's safe to say that their sales are going to go up this year as well. So they definitely have to reprice the stock, and it looks like they need to reestimate all the estimates for Tesla because they keep exceeding expectations. I look into Alibaba, the more diversified I discover the business is, and I'm liking it more and more. So they have, they have Alibaba, they have AliExpress, which everyone's familiar with, a couple of other, Taobao, Tmall, these are other online e-commerce sites that you can buy things from. Youku is kind of like their version of YouTube in China. Alibaba Cloud is their cloud services. Today I'm just going to be focusing on FHDPRW, which is actually their grocery store chain that I just recently discovered that they had. So FHDPRW is essentially their a grocery store chain for Alibaba, and basically all the interactions in there are, you can use the app, they have digital price tags, you can even pay with Alipay once you leave the store, and they even have an in-store like eating area upstairs, and they get fresh produce from all over the world. And yeah, you can just use your app while you're in the store, and each store doubles as a fulfillment center. So essentially, they can do online orders. If you live within 3 kilometers, they will deliver you a meal within 30 minutes. You can also dine in FHDPRW as well. And they have automatic pick and goes, just quick, easy food that you can take with you. Alibaba also has their own dine-in restaurant. So you just scan a QR code on your phone and you can order anything you want to eat from the restaurant on your phone. And all you have to do is wait for the automated robots that that they kind of use in their warehouses, and they will send the food to you. So there's no server, there's nobody to tip. It's way ahead of where we are here in Canada for sure. And they opened their first store in Shanghai in 2016, and as of right now, as of March 2020, they have a total of 207 grocery stores. So that's incredible growth for just a couple of years. That's like 4 years. Going from 1 store to 207 is incredible. With 20 cities in China, and they have a high online penetration. So about 60% of their total sales are from online purchases. And probably the most exciting news I've heard, or the article I've read about Alibaba, is the fact that they're planning to open their own wholesale store. So kind of like Costco, they're going to be opening 3 of these chains. So it's going to be under the FHDPRW brand, but this one will have an in-store membership that members have to pay for annually. And so it says that 40% of the products in the membership-only X store are the company's exclusive products. So essentially, if you think of it like Costco has their Kirkland brand, where they still sell you a quality product, but at a lower price, and they get to have a higher profit margin because they're not, buying a jar of peanut butter or paper towels or whatever other product there is from a third party. They can make it themselves, they can make a higher profit margin, and you get to save as the consumer getting something really cheap. And I mean, Costco is one of the best companies in the world. It's one of the best businesses around because they have very good customer service. They retain customers. So we'll see if Alibaba can succeed here, but the business model definitely works. And Costco is definitely on my short list of stocks that I'd love to own. I find the valuation is just a little bit too high. If it were to fall down to something a bit more reasonable, I'd love to own some Costco as well. But now I'm getting some exposure to wholesale warehousing with Alibaba and grocery stores. That's just amazing. And I'm just going to stick with this business just because the more I read about it, the more I dig into it, the more I fall in love with this company. And the stock price going up and down is not going to change how I feel about the company because I know what I hold. And if we look at Charlie Munger's portfolio, which he runs at the Daily Journal, he actually doubled down on Alibaba. He bought twice as many shares. So he went from 300,000 to 600,000 shares. Charlie Munger, one of the greatest investors of all time, who is very famous for, running Berkshire Hathaway with Warren Buffett, actually changed Warren Buffett's perspective on how to view companies and to really focus on quality of a company. So he's actually had a big impact on how Warren Buffett invests, and Warren Buffett is the most successful investor of all time. And if you want to get free Bitcoin every single day just for shaking your phone, and $30 for signing up and depositing $100 and trading it, you can fund your account with e-transfer and buy and sell Bitcoin and Ethereum You can join my link in the description. You can also sign up for Wealthsimple Trade in the description below and get the value of 2 free stocks.